Welcome to the Closing Beat, everybody. Happy, well, it's Thursday. Sorry about that. If you're one of our customers, we have Wine and Wealth tonight. We're going to go over the portfolios that we manage here at Jazz Wealth, any changes or updates to that. And then, of course, we'll go deeper into the markets, give you the broad picture view. For those of you that maybe can't tune in all the time, we're actually going to be starting a new series there in our new library that we're building for customers only. We're financial advisors. I think I've said too much already. We manage our own portfolios. We build our own funds, all of them visible on our website. And we do that for customers, and this is just a daily show we like to do to keep everybody updated. We put it out there for the public, see if we can help you guys as well. If we do, for some reason, maybe you'll hit subscribe. If you need our help, maybe you'll check out Jazz Wealth. On the screen, you can see the stock markets higher again. We started the day lower. Actually, the chart off to your right there shows the markets starting lower on the day, staying lower on the day, continuing that pattern that we saw yesterday where you had moments in time where there was just enough news to push the stock market lower, and then when it got quiet, the markets rallied, and then a little news and it pushed the market lower. You could see it there closer to the middle of the day, and then when it got quiet again, the markets rallied. So it's kind of like the market's telling you, hey, if you just keep away all the people trying to make bad news out there, the markets would just keep dragging higher there. But nonetheless, we've got some things to cover. You can see the Dow was higher by another 120 points, another 0.5% there. S&P added 11, and the Nasdaq was higher by 28, one of the better movers out of the group there. You had weakness in retail. You had the government shutdown talk. You had the Fed talking today. All of that being the sort of things that move the markets. If you look first thing this morning, that's your retail news that caused the markets to push a little bit lower there. Then it recovered. Then you had the Fed chairman speaking, just a tiny little blip lower there as he started the comments. And then by the end there, it started already rallying. Government shutdown really doesn't seem to be doing anything of much, but that's what's going on. Out of the Fed comments today, the chairman said that they would be flexible and patient on monetary policy. They think inflation is under control. It was one of those sort of conferences that he did at the Economic Club where it was like a laid back, hey, I'm a cool guy, like I'm a normal dude. When I say things, I mean the best for the world. It was really sort of like that. There was some jokes about how much he makes and would they audit the Fed, and I thought he did a good job. I watched most of it, and he pretty much answered all the questions as you would expect, but with a little more laid-back attitude, and I think the markets responded to that. Early this morning, it was all bad news. All of the bad retail news, airline news, everything that could come out. You notice how the systems kind of kicked out all that news at once. It's interesting if you look at a timestamp of when all the news reports hit from the airlines, from the retail stocks. They all wanted to get this bad news out while everybody else was getting bad news out. And so that sort of made some headlines drift a little bit lower. Amazon was one of them. They're the kings at this, by the way. When they have something to say that may cause a little bit of unrest, either with the price of the stock or with how you view Amazon, they sneak it out when there's a ton of other bad news. I swear there's a program that they use for that. Amazon's buying self-driving forklifts. So remember that raise that they just gave to all their employees saying, hey, we're going to pay $15 minimum per hour. Now they just need less people. That's why they can pay more. Self-driving forklifts on the way to Amazon. Let's get started here. So if we look at the overall markets, I'll just kind of sneak in there. There you go. White charts today, a little bit whiter than they were yesterday. I like them. We're sticking with them. The Dow higher, of course, by a little bit, and right back into a resistance area that most people are going to focus on. A lot of technical strategies continue to sort of meld in this one spot. The Nasdaq 100 back towards the 50-day moving average. You can see we were higher today, back and forth throughout the day. We didn't really accomplish a whole lot, but hey, a win's a win, so I don't think many people are complaining. The S&P 500 continues to stay at a technical area where it's a chance. We used to call it a moment in time. It's a moment in time for the markets to show continued strength and bust up through it and just catch everybody by surprise, and they'll be forced to buy, or it's a moment in time where we take a break. I would be happy with us either taking a break or moving sideways. I think that would be good, generally speaking. The Russell 2000 edging its way back up into a known resistance area as well. Again, basically, if you see the markets pull back a little bit or go a little bit higher or just chop around in this area, it's probably normal. It is normal. I would actually prefer it. So it's something I'd probably prefer. And because of that, you have volatility drifting a little bit lower as well. You can look at volatility using ETFs or futures if you like, but volatility day by day, meaning the level of fear in the markets is just slowly deteriorating there. I expect that to continue unless there's some major news announcement until we get to earnings next week. We have, well, we have a lot going on next week, but we have earnings season starting, and we'll have a lot of banks reporting there as well. So the markets could kind of settle in to a back and forth kind of a range, up days, down days, whatever, inside of this area, all right at this resistance area, depending on the index you're looking at, until we get to earnings. I wouldn't be surprised if that happened. Again, not one S&P stock hit a new 52-week high today. Yesterday tied the record for the second longest time that's happened, meaning no stock in the S&P 500 broke to a new 52-week high. Today's 15 days. That makes it officially the second longest stretch of days since the what did I say? I'm looking everywhere. The second longest stretch of time since 1990, when the market, or the S&P 500 stocks, have not hit a new 52-week high. I butchered that, but you can tell that that's how sharp the decline was. I maybe explained it a little bit better yesterday in our video there. Bloomberg had a note out overnight. It was actually an article that this is the strongest, as of today, the strongest 10-day win streak for the market since 2009. Not really fair, though, because if you go back to 2000, you can actually find 5 other times where the market did the same thing. They just chose to cut it off at 2009, which made it kind of interesting. Hey, strongest 10-day win streak since 2009. You know, like, you can fudge anything, I guess. But, hey, it's a positive. We'll take it. Okay, over to stocks here. Like we said, retail is going to be one of the weaker areas that you saw today. I'll go over some of the stocks in just a moment. Retail was down about 1.5%. I'm using XRT as the symbol to use to check the ETF there for the retail sector. I like the XRT the best as far as using that to check the broad-based retail stocks. I've done some videos on that in the past, but anyways, the good news is, although you had Macy's, Kohl's, things like that start off the day lower, Target we'll go over as well, they closed well off of their lows. So once we were able to get that news out of the way, people kind of moved forward and thought, hey, maybe that's a dip that I'd be interested in buying. So I don't know. I thought that was interesting. We'll cover the stocks in a moment. Reits, with the Fed comments today, Reits were able to move back up into the 200-day moving average. This one is the ICF that I'm using today. I use a handful of them to track the Reits as far as just using an ETF to pull it up real quick. The 200-day moving average, definitely something to pay attention to if you're a short-term investor. Oil, let's look at oil futures, the cleanest way here we can pull into that. That's going to be officially 9 straight days higher. Had a nice little gain on the price of oil, just a tiny little one there. You can feel people saying, oh, maybe this is too high, and you got a little selling pressure, and then people saying, no, ride the wave, man, dive into the momentum. So oil, a little bit of a tug of war there, very, very small gain on the day. Bonds. So bonds started to pull back after the Fed comments as well, which just means yields ticked up a little bit there. 10 years now trading 2.733 if that's something that you follow. So here's your long-term bonds. Anyways, banks, whether the bigger banks, the retail bank, the regional banks, the XLF, KRE are the two symbols I'm bouncing back and forth between here. They were all over the place because you got analysts positioning ahead of earnings next week. So you had tons of different bank names yesterday get upgrades and downgrades, and then tons of the regional sort of smaller banks today get their upgrades and downgrades. So banks were just sort of sloshing around, not accomplishing a whole lot there. You should still be able to see it there on the screen. Macy's, there you go. So Macy's broke down to new lows here. They had their results for the holiday season not really good. They cut their full year outlook for 2019. Shares sold off almost 20%. They were over 20% at one point throughout the day. You could see the rather extended decline there. That was the major headline, by the way, that started the whole string of other companies kind of saying the same thing. Target actually only lost about 3% on the day. They actually had good news. If you look through the report that Target gave you, sharp increase in the number of people in their stores, like they saw an increase in volume. Web traffic was up 5.7%. It was only 3.4% last year, so a good increase there. People like that one. But, you know, they didn't raise their outlook. A lot of times what happens, if I can just sort of geek out real quick, a lot of times what happens is when a company says, we did well here, we saw more traffic, we saw more of this and that, whatever, that leads to positive signs, a lot of times the company will say, and because of that, we are going to raise our outlook going forward. Remember Lennar yesterday? They didn't do that either, right? So they said, we saw less overall orders, but we see more traffic in our model homes and everything, and they were optimistic about that. However, they didn't raise their guidance or even announce guidance at all going forward. That's sort of a negative. Now, it worked out for Lennar yesterday, but for Target today, it's kind of like, well, if everything's that good, then why aren't you saying good things about your future coming up here? They were a little hesitant on that one, so stock price down just a little bit. Boeing up 2.5% today. That's your best performer in the Dow, by the way. Upgraded at Morgan Stanley, put a $450 price target on it. That's $100 higher, by the way. If you look at the chart on the screen there, you've got in the last 15 days, can you see it? Yeah, the last 15 days, it's rallied over $50. So it gives you an idea of how fast Boeing is moving. That's a 17% gain. Anyways, analysts from Morgan Stanley said he's comfortable recommending this stock and the price target of $450. Well, you can kind of see on the screen there how much further he thinks it has to go. Not my suggestion. That's his. Not that I disagree with it. It just, you know, that's what it is. Bed Bath & Beyond. I always get these confused. Bed Bath & Beyond shares higher by 17% on the day. Really, really strong outlook going forward. They were very, very positive about everything. The results that they had, earnings results, are a little bit mixed there, so not, you know, so exciting. It was more the comments about going forward. Today's volume is 8.5 times the average. Gives you an idea of how many people were playing that stock. However, this is one of those things that they just don't point out. Like, you won't see this anywhere else. You go, why was the volume so high? Why did the stock move so much? It was great news that they said, but it really wasn't that great a news. Why would it cause almost a 17% rally in a day? Well, if you take a look at the number of people that are short the stock, meaning they're betting on it going down and have been betting on it going down, you have 24% of the shares that were out there were borrowed to then short the stock. Well, when the stock has a gap higher, what was that today? The stock actually gapped higher overnight by 7.5%. When that sort of thing happens, it worries short traders and they'll buy back their position. So not only do you have the people that are excited to buy the stock because they thought the news from the company was great, they want to own it, all that good stuff, but you have the short traders who wanted it to go down going, uh-oh, we're in a little bit of trouble here. Why don't we buy back our shares? If you're familiar how that process works with shorting shares, it sort of doubles down on the number of buyers throughout the day. So that's why you see volume so much higher throughout the day on some of these stocks when they report that kind of news. A lot of times if you check the short interest, that's how you actually look it up, you would see, if you see a higher number there, you just know that that's people that they just temporarily got the direction wrong on the stock, or they chose to just cover and take their profits. Doesn't necessarily mean they lost, of course. Twitter shares a little bit higher, back towards the 200-day moving average. I like to point this out. Double upgrade, right? So I like to point out the double upgrades when they come out. Bank of America raised their price target to 39 from 31. On the chart, that puts you just above all these recent highs, back into that gap zone. Technical traders look at this sort of thing. Whenever a stock gaps down, the saying is a stock will always fill a gap, meaning it will always attempt to go back and trade through the gap down price here, meaning let's say that it just moved all the way higher here, then essentially it would have filled that void from back in, July. So $39 price target puts you midway through that. Very common for analysts to do that, by the way. They know the rules. They're no stupid, they don't get that job because they're dumb. So they put it right at $39. Basically, the Bank of America analyst that upgraded the stock said they see improving analytics for the 18 to 29 crowd, which is important. Snapchat can't seem to get that done there, but they did. American Airlines, there you go. Stock lower by 4%, was lower by about 9, almost 10% on the day. Company lowered its full year guidance, the range that they talk about what their earnings are going to be. Basically, a lot of this had to do with the last month of the year. There's also some concerns about the government shutdown. American Airlines has a lot of government contracts, and so there's some concern about that one hurting their overall performance, not to mention what's possible with TSA. We're not there yet, though. Kohl's also traded lower on the day. Again, this is another retailer, but traded up off the lows. I feel like we talked about a lot of stuff today. You get the point. Something which barely made the news, I don't even think they talked about it on TV today, was Bitcoin. Traded back under 4,000 and even did worse than that, down about 10% on the day. I saw an article somewhere, I'm not sure if it was from today, but other than that, very quiet from anybody that follows Bitcoin. Maybe just Not excited about that drop. Looks like after hours here, you got Netflix trading higher. I don't see the news immediately. I don't understand the news from ATVI, but that one's also trading higher too. Some of the bigger names that you may want to pay attention to going into tomorrow. Just happen to see them pop up on the radar there. Hey, we're not out of the woods yet, right? Look, like I said yesterday, if you want to go to Disney World today, tomorrow, whatever, take a long weekend, you probably won't miss much in the market. Earnings. Everybody is so focused on earnings, where the focus is going to be how much do you beat the new lowered expectations. I try to always give you a heads up before earnings season what everybody's going to be looking for. A lot of analysts, a lot of traders have lowered their expectation for companies. And so now if they lowered the bar for you and you still can't jump over it, that's a bad sign. So this could be a disastrous earnings season, or it could be one where people go, okay, we didn't need to lower the bar so much. Turns out the economy slowing is a good, healthy thing and not something that's a sign of, bad things to come. Of course, the government shutdown, I don't know if these people are actually talking to each other or what. I find it fascinating how the whole process goes. It's a great study on public manipulation, not from a negative perspective, but it's so cool to watch how people can say one thing one day, one thing the next, completely reverse course, and use the right words to do it from both sides. I'm not like arguing one side or the other. It's fascinating to me. Anyways, Brexit next week, that'll make headlines, so be ready for that. JP Morgan starts off the bank's earnings season on January 15th. And I really don't really know much about the trade news. I haven't heard a whole lot in that respect. A lot of positive news out of the Chinese media. If you stay up late and you watch all the reports come out of China, they put a pretty positive spin on it. So we'll see what Trump does with it once he gets his hands on it. We'll see. Mary, oh, you like the white. Mary says, what's my astrological sign? I'm a Gemini, and very much so. Ricardo likes oil. Cool. So he's buying pullbacks. You would buy pullbacks in the price of oil. Nice. How do you invest cash in a brokerage account? 30-day Treasury money market. This is the cash that's been allocated for dollar cost averaging over next year. Well, you may not then, right? Depends on the brokerage firm. Some brokerage firms give you really good options as far as where to safely store it. Some of them even have these high interest savings accounts built right into them. If that's the case, you may want to work with something like that. If you like bond funds, I don't know. It's got to be liquid, right? So it depends on what your brokerage firm offers. Freeport McMoran, I haven't looked at them in a while. Yeah, long downtrend. Also part of the bottoming process there, AZ. Sears, yeah, I did. I think I put that in the bottom there. Eddie Lampert, not sure why he wants to do this, but yeah, there must be something I don't know. $5 billion bid to keep Sears going. We'll see. Michael, I appreciate you watching. Thanks, AZ. Aaron, any rules of technical trade? Just stuff you pick up over the years you notice people talking about. Resources, you can learn about them. I mean, I'm a little biased. Maybe here. Maybe I could point out stuff as I see it. Hopefully, there's been a lot of rules lately that we pointed out. 2019 favorite stock or ETF, I would lean with some of the bigger analysts. I'm not actually allowed to suggest an individual stock given the licenses and the SEC registration and the sign your life away that you promise not to do, that sort of thing. But I would lean, there's some of the big four analysts I think are on track with some of the names. I pointed all of them out, by the way, over the past 2 weeks. Sorry, I can't do more. David wants the markets to drop. I'm with you, man. Small drop. Just a little drop would be good. I think you got a pretty good book there for value investing. There is a lot of value investing books, not necessarily on the retail side, but from a educational side, like you would use in a college. Like if you took a class by somebody, those kind of books. I'm not educated enough to know what that's called, like a college book where it's more a study through the process, where you're learning through what's happened in history, versus just someone telling you, oh, you look for certain valuations of this, and you buy them. I'm more interested in that from a higher level. Gemini was your second. Do you like AT&T? They got earnings coming up too as well. There's a lot going on in this space. This is a tough one because normally AT&T is plugging along doing its thing and you can understand their business model. With everything that's happened over the last quarter, 2 quarters, I don't have a good grip on it, to be honest with you. There's so much going on there. Also with Disney, sort of a similar thing. Fox, Comcast, all that great stuff. Takes a while for me to absorb all that. 17-year-old just opened, cool. 17, first paycheck, cool. You want to open a Roth leader's cap, how much they contribute? Well, it's going to be based on her earnings. So if your 17-year-old only makes, $2,000 for the year, it's based on that reportable income. She can't obviously contribute more than she earns. That goes for anybody, by the way. Yeah. Kinder Morgan, same thing. So the rally over the last 15 days, do you think it's a little too far, too fast? You're coming up right into known resistance areas. Even if it moves up to 18, by the way, here's the screen. Nope, that's not the screen. Even if it moves up into $18, you still have to consider the risk to reward. If you're thinking about buying this, and this is just a simple analogy. If you go, hey, I see the strength, I want to buy this. What's the reward? 18 and a quarter maybe? Look at all this selling up here. So you always want to consider that. If it fell and the markets took a little bit of a break, you can now probably justify the risk to reward if you felt strongly that it would get back to the highs here, 18 and a quarter or so. But for me, let's say 17 and a quarter to 18 and a quarter, percentage-wise, that's impressive, but you make $1. And you make $1 with the possibility of it falling $1, right? A dollar win versus a dollar loss, you have to be very accurate in order to be a successful trader or investor if you're going to trade with that sort of win-loss ratio. So careful on that one. I would be with you where I'd say, hey, I hope this thing pulls back. I hope people get scared for 5 or 6 days and the markets kind of pull back. Maybe that's your chance. Yeah. Well, you guys are just full of questions today. I don't like the leveraged ETFs, by the way, Alan. If you're going to be in and out and you want to play it back to 75 real quick and you just have some belief that it's going to get there, fine, but no investing in these. You want to, there you go. Michael answered you as well. Yeah, CES wrapping up. So many cool things coming out of CES there. That's crazy. Careful on the Roth IRA there. It's got to be no more than what you make. So the limit is the limit. Let's say $6,000 for 2019. That's the limit. But if you don't make $6,000, then you can't put $6,000 in. Think about it. The IRS is going to go, how did you contribute $6,000 of after-tax money to a Roth IRA if you only made $3,500 from a part-time job? Big red flag, easy red flag for the IRS. I see it all the time. I see it all the time. ExxonMobil, I kind of feel like sort of an underperformer for this last little rally here. I think there's probably still room for it to go, by the way. And so while I would hope it would pull back, I think there's room for it to go back to 75. What I just said a second ago, that risk to reward there, totally different story here on ExxonMobil. So if you feel like it's got more room to go back up towards the 50-day moving average, 75 area, you could justify that. So for me, it's not necessarily, is it going higher or lower in this case? It's, if it does go higher, is it going to pay off versus if it goes lower and I have to take a little bit of a loss there, does that risk to reward make sense? I always look at things that way. Can't tell you which one though. Can't tell you which one. No, don't like DPW. Well, I don't know, maybe you meant to type the symbol wrong, but flower plants. Sorry. You must be waiting for some news or something on that stock. I don't need to look much further into that stock. Cool. Okay, so I think we got basically everything covered there. Ethan, the AMD comments, we mentioned this one a few times. Don't really expect much in terms of fireworks or excitement until earnings. All right, really hard in this space to get a stock to just blast off or collapse if that's what you want. Given all the news that's out there from the previous earnings cycle. So everybody's just sitting back waiting for earnings, and because of that, that's why you see what the stock's doing there, just chopping around back and forth there. So very interesting. I haven't looked at UTG, to be honest. Don't know much about this name. My first advice is to check the volume on that one. If you're planning on trading this one, you want to check the spread between the bid and the offer. This looks like one of those stocks that would drive you crazy. I'm going to dig just a little bit deeper here for you. Oh yeah, this one will drive you crazy. So watch this one tomorrow if you're interested in it, and look at the spread. The spread meaning you'll see a bid and you'll see an offer, and you're going to see the bid is like $30.30 or something like that, and the offer is going to be like $30.70. So if you wanted to buy it right away, you have to pay $30.70, right? If you then changed your mind, you wanted to sell it, you'd be able to sell it for $3.30. If you're smart enough, or not smart enough, if you have a background in trading, you might be able to do like $3.45, something like that, and tinker with the orders a little bit. But watch the spread. So this one, because it trades really low volume and not a lot of people come over to trade it, I'd be a little cautious on that one. Get your price. That's probably the best thing I can say, is when you decide this is a buy, make sure you get your price and hold to that. Give it time. Cool. Okay, that's all I have for you. I really appreciate it. Again, if you're one of our customers tonight, Wine and Wealth, that's why I went longer today, because I'm basically going to stick around until then. We're going to cover the portfolios, we'll go through the markets, and then if you have specific questions, I'm actually allowed to answer you in our Wine and Wealth, where we can dig into buys and sells of different stocks if that's what you want. I will stay as long as you guys want. Just have a few things to go over actually, so if you can't make it, you can watch the replay. I know that I always cut right through it, in the very beginning. I just knock out what we need to cover, and then I'll stick around and answer questions for you if you have any. All right, so that's all I have for you. Thanks for watching. We'll see you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interests comes before ours.